G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now the charts are showing consolidation for both markets. Before we go any further, make sure you hit that like and subscribe button to support the channel, and we're going to include some back testing to show you a couple of methods of trading strategies. In terms of the outlook, as of today, July 16, 2025, top line performance, both indices are near record highs, S&P around 66,200 and NASDAQ fueled by mega cap tech AI driven by strong earnings expectations and investor risk appetite. Valuation and caution, forward PE ratios elevated around 22, Buffett indicator at 198%, raising concerns of overvaluation and heightened complacency. Geopolitical headwinds, Israel and Iran hostilities and threats to close the Strait of Hormuz triggered 7 to 11% oil spikes in June, briefly dragging indices down by about 1%, as investors weigh recessionary risks via inflation. Sentiment and central bank backdrop. Fund managers hold historically bullish positions, expecting Fed rate cuts later in the year, but bond market shows stress in long-dated yields. Outlook split, bull case, BNP CITI sees mid-6,000s to 7,000s by year-end amid a capex supercycle and stable oil. Bearish voices, Stifel and RBC warn of 10 to 20% downs if oil inflation persists or conflict escalates. Bottom line, markets remain strong, underpinned by earnings and AI optimism, but fragile on valuation and geopolitics with Middle Eastern flare-ups and oil risk likely to dictate volatility in months ahead. So again, looking at the long-term trends first off, we've got the monthly, the weekly and the daily. So on the monthly, the price is still very bullish and reaching new highs, as we said, but the CCI1500 is showing somewhat of a bearish divergence, but the CCI is also broken into that moving average range as well, which is showing a more positive view. It's not below that moving average range, which would have been a lot more bearish. But again, notice these fair value gaps, and we may see the price pull back towards these areas marked by red here, but also this blue area marked as a bearish divergence target. So again, just be cautious of that. We might see further declines in the near term. Again, that could take possibly weeks or even months, but again, just be aware of that as well. On the weekly, we've got another bearish divergence, although currently bullish with the CCI and the price above the moving averages. So as I said, the price is still rising. And on the daily, likewise, you'll notice here it's still making new highs, but notice this consolidation at the moment on the daily. And we're also seeing if you zoom in, you'll see a bearish divergence. And the way we measure that is we look at the highs on the CCI versus the highs on the price. To that point, so higher highs on the price versus lower highs on the CCI. That's a bearish divergence, and if that was to pull back, we would draw a Fibonacci range. It looks like it is pulling back at the moment, so just be cautious. That'll be the minimum range, and it's not far off it at the moment. So the minimum pullback will be that 23. It's a bit slow at the moment. 38% range. And it's not far off at the moment, so possibly hit it in the next few hours. The way it's going, the CCI is still dropping. That's on the daily. So on the hourly, so even if you're trading on the daily, we look at the lower time frames, like the 1 hour, and you can see there we had a bearish divergence on our last video. We marked a target range there. Now that hasn't dropped to that level yet, but again, if we extend that trend line on those CCIs, that's still a bearish divergence versus the same period on the price. So again, looks like it's coming back towards a pullback. And if we're to take it from that high down to that low, we would draw a target range on the 1 hour time frame. That 38% is a minimum target range we can expect it to go to. So it's not far off that on the hourly as well. It looks like the CCI is still dropping, as well as the price below the respective moving averages. Now, if we go to the back tests, what I've done here, I'm showing you let's get rid of that Fibonacci for a moment. Starting the 1 hour time frame back test from the 23rd of June when the CCI broke above the moving average range, and so did the price. And we're still taking long trades because the price is still above the moving averages. But again, as I said, be cautious because they're showing a bearish divergence. So I wouldn't be going long anytime soon. But you can see here, had we gone long according to the CCI14 strategy, that's generated 1,616 so far versus the CCI 350 generated 4,694. The CCI14 strategy basically works where going in a direction of the daily, of course. That's always the number one rule. The CCI14, when it breaks above the zero line, we take a trade and we close it out when it breaks, hits a 0.3% target after that 1 hour period. So you can see there it's had a few single entries made, and at the moment it's not trading or open. On the CCI350, we take a long position when the CCI350 breaks to the an upswing like it did there, go long, and we close it out when that CCI350 breaks below that moving average. And these strategies, by the way, are in the description below if you want to learn how to trade it on that particular platform. So the NASDAQ has got a similar pattern to the S&P. On the monthly, you can see there the price is still making new highs. It's broken through that previous resistance we had. So we would extend that trend line on that. Plus we've got a bearish divergence here on the CCI. We'd extend that trend line. And likewise on the price, we'd move into that point there. So that hasn't pulled back yet on the monthly. On the weekly, we've got another bearish divergence. Hasn't started to pull back either. And on the daily, you can see there, even if in that little range similar to the S&P, we've got a little bearish divergence there with the CCI highs dropping and the price highs rising. So that's a bearish. Although don't take short trades. For short trades to start being taken, we want to see the price and the CCI break below the moving averages. So looking at the 1 hour time frame for any micro moves. So again, what we're looking for is any divergence, and the highs and the lows are moving in tangent between the price and the CCI. So there's no divergence that I can see at the moment. And as I said, the hourly is broken below the moving average price range, and the CCI is also broken below the moving averages. So theoretically, as soon as you see that break below the moving average on the daily, you would take short trades. Now, in terms of going on the back tests, similar to the S&P, I've started the back tests here around about the 23rd of June when the CCI broke above the moving average, and so did the price. And that's where both of these back tests started. And you can see there's been a few trades there made on the CCI14, generating about $557, and the CCI350 a lot fewer trades, but a lot more drawdown with more contracts entered in that period there, generating about 2,190. So again, just always be careful with these drawdowns. You want to be careful how you get in and out, and manage your money in accordance with the daily trend as well. I recently posted videos comparing two strategies I used in the back test for today. Links are in the description below, so watch that video to better understand the concepts and that I've gone through today. Also, if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.